Yeah, g'day traders, Chris Weston here, Head of Research at Pepperstone. Great to see a bit of movement, bit of volatility, bit of range expansion, specifically in the index side of town. You've got the VIX trading at 21.8% in the cash index there. That gives us an expected move now in the S&P over the coming 30 days, up or down on average of 1.4%. So a bit of volatility coming back into the equity markets. Will this continue? One market we're watching very closely is the Nikkei in Japan. Big moves yesterday, 3%. Will we see that follow through selling? That manifested in what was effectively a very weak European trading session, specifically in the FTSE. Now, the FTSE has been a momentum beast. It's been a juggernaut of an index of late, really, really strong moves. But I think it's probably just gone a little bit too far. The elastic band's been pulled back, some froth coming out of the market. And then if you marry that with the headwind that is cable pushing 141 into the February highs, that's just seen a reason for people to take a bit off the FTSE. So will we see some follow through playing through? If you have a look at US equity markets, some de-risking playing through again, but specifically in the Dow, we saw the Dow down 1.3%. The price-weighted market being pushed down by names like Home Depot, United Health, and also Goldman Sachs. In the S&P, it was really the materials sector that worked well. That was up 0.4%. It was the only sector that was higher. In fact, breadth was really poor. We saw 83% of stocks lower on the day, and volumes were about 13% on the index above the 30-day average. So some decent volume playing through the cash markets there. So a little bit of de-risking in that market. But the word that everyone's talking about is inflation. It's quite surprising to find tech doing so well and being an outperformer, given that inflation has been the buzzword there as well. Now, in terms of the actual intel that we saw throughout the trading session, we saw 6 different Fed speakers. Lael Brainard was probably the pick of the bunch there. She gave us some insight, but patience seems to be the buzzword that everyone's focused on. If we have a look at the Treasury market in reaction to some of this, there was up a couple of basis points in terms of yields across from 5s to 30s. It's surprising then that we didn't see more of a reaction to the downside in the NASDAQ and probably some dollar strength. The dollar was fairly flat on the trading session. But I think then if you have a look at what we saw in the data flow, the NFIB Small Business Confidence and Optimism Survey was very strong, pushing up 1.6%, 1.6 points there. The job openings numbers on the JOLTS, highest we've ever seen there. So there's a labour scarcity issue which potentially could lead to wage growth coming forward. It was the commodity trade that worked well. Copper at 1.3%. Iron ore continues to work well as a futures market there. You've got gold prices fairly flat, but it looks like it might want to push a little bit higher in the short term. The risk that we're facing now is this word inflation. People are saying, are we behind the curve? And that's an interesting one. Well, that's why we're going to be watching the CPI number in the US tonight. It is the big event risk for traders to watch out. I know employment has been pushed back a little bit, given that weak non-farm payrolls number that we've been seeing. The labour market is clearly needing some extra strength and some healing. But the CPI number tonight at 10:30, the market's expecting 3.6% on headline, 2.3% on core. If we get a headline number going into 4%, the dollar could strengthen. You could see some sell-off coming through in the bond market. You go into the bond market specifically, and you've got the 10-year Treasury auction. The government there, the Treasury Department, are looking to issue about 41 billion in 10-year Treasuries. So what will the demand be like there? If it's weak demand, you get a low bid to cover, then you could see yields moving higher. And again, that could put some downside pressure on tech and some of those yield-sensitive names. So an interesting session ahead. We are seeing some high volatility playing through in equity markets. It's going to be interesting to see the reaction in the ASX today. We've just seen the budget being announced overnight. The Aussie dollar didn't really know what to do with it, but we're seeing some selling in treasuries, Aussie treasuries, and they obviously see that as somewhat fiscally expansive relative to expectations. And so that's going to be interesting to see how the equity markets play. But certainly if you look at the volatility in the markets, we've got to keep our eye on that CPI number. A hot number there could put some further volatility in these markets.